Uranium Energy Corp, one of only 12 uranium producers in the world. UEC trades on the New York Stock Exchange. They have more than doubled their in-ground uranium resource over the past 2 years. They've also become one of only 6 uranium producers in the United States. Led by Amir Adnani, who has been ranked as one of the top resource CEOs by Casey Research, Amir has attracted major investors like Rick Rule of Sprott Asset Management, Li Ka-shing, the richest man in Asia, and institutions such as Vanguard and BlackRock. Learn more about Uranium Energy Corp at uraniumenergy.com or by calling 866-748-1030. Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with a special guest, John Rubino. He's the author of 2 books about a dollar crisis. He runs a website, dollarcollapse.com, and he's actually recently working with an asset management company that maybe he can share with us. So John wrote The Money Bubble recently with co-author James Turk. We are in extremely volatile times. A lot of people are very concerned about the economy, even if they haven't been paying attention. Everybody's kind of had this gut instinct that they feel like the recession never ended, even though economists would tell us otherwise. So we're here talking to John today to find out what the real scoop on the economy is, and really a focus on the markets and what John is seeing, because he not only writes and eats and drinks and breathes this stuff with the economy and currencies, but he also is connected and friends with many people out there who are managing a lot of money. And the way the money goes, that is the way the market's going to go. John, thank you so much for joining us.
Hey, Dan, it's good to talk to you again.
Hey, we just spoke a few weeks ago, but a lot has happened in 2 weeks. So thanks for coming back on so quickly.
Oh, sure. Anytime.
Well, John, let's just start off. In the last few weeks here, the markets have been extremely volatile. We went from the recovery is fully intact and we're going to start raising rates to all of a sudden it looks like rates aren't going to rise, and the Dow has had some big moves down recently. What are your thoughts on the markets right now?
Yeah, we've got so many things going on at the same time that it's hard to tease out what exactly is causing what. But as you said, the Fed's been threatening to raise interest rates for quite a while now, which would make it the only central bank in the world doing anything like that. Everybody else is either cutting rates or liquefying their economies in some other way. And so for the Fed to do that makes us a real outlier at a time when the dollar is already the strongest currency in the world. And so presumably, if we start raising interest rates now, that would push the dollar up even further, which would throw even more of the global financial system out of balance, which is one thing that has everybody spooked. At the same time, China has tripled its debt in the last 6 years and used a lot of that money really unwisely. So now they have this massive mountain of debt and all kinds of malinvestment, white elephant cities and airports and roads, things that should have never been built in the first place, but added to their GNP while they were being built. And so the economy in China looked much stronger than it actually was. Its stock market went up dramatically, maybe in recognition of the fact that the economy was strong, which was a false recognition, and now their stock market is tanking. And so China is kind of flailing around, trying to decide whether to let the markets be markets or to intervene. And they've been intervening in really weird ways lately. They threw a ton of money at propping up the stock market, and then they announced they were going to stop that, and that they were going to start arresting the people who made the stock market go down. So now selling and short selling are being retroactively defined as crimes in China. So. And that's the second biggest economy in the world. So you got the biggest economy raising interest rates, the second biggest economy flailing around really incompetently in a credit crisis. So it's no surprise that the world is looking kind of chaotic right now. Oh, and that leaves Europe aside for the moment, with Greece temporarily being pacified. But they've got an election coming up which might put people in power who renege on the deal that the current government just made, and blah, blah, blah. It goes on and on and on. There are an awful lot of black swans out there, some of which are landing and some of which are circling. So, and this is what you should expect. This is not a surprise, because when you borrow too much money, things get chaotic and countries become ungovernable. Look at our presidential primaries now. You got Bernie Sanders roaring to almost parity with Hillary Clinton, and he's an avowed socialist. You've got Donald Trump leading the pack in the GOP primaries, and he's, use your word, call him what you want. He's not a normal candidate. And so that is what happens when you borrow too much money.
Yeah, it's interesting. I mean, you bring up the political part where, I mean, it truly is fascinating to see the rise of Bernie Sanders, Donald Trump, and even to a lesser extent, Dr. Ben Carson, where people, they're just rejecting whatever they've been given for so long. Now, hopefully, some really good leaders, and because this is their time. This is where a Washington or Jefferson could rise in this situation, but right now we're not seeing those people. We're kind of seeing the opposite. We're seeing a socialist, like you said, and a person who, look, I respect Trump for a lot of things, but the rounding up thing with people kind of scares me, because that's just there's ugly images throughout history of governments rounding people up. Well, hey, so we don't get too off topic here. The markets, the media is trying to say that this was just the 10% correction. Jim Cramer's literally pleading with people, get in as fast as you can, because this was the 10% correction. It's behind us. The blue chip names are going to start rising. John, from the people you're speaking with and the research and analysts and things that you are doing to follow this economy, do you think this is a short-term event, or do you think we're heading into 6 months of turmoil here as things kind of, I guess, the emperor has no clothes moment?
Well, I don't think there's any way you can know what the market is going to do, or what the financial markets in general are going to do in the short run, because they aren't really markets as we grew up understanding markets. They're mostly just rolling interventions by different governments, creating lots of new currency and tossing them at bonds or stocks or options or commodities or whatever. And so that makes it impossible to say who's going to do what next, because it's a political decision, not an economic decision, and what the impact will be. See, now eventually, as you said, an emperor's new clothes event will take place when people finally figure out that all of this is kind of made up. We're creating an environment that looks one way, but that's actually an illusion, and the illusion is propagated by newly created currency that is just tossed out into the market. And when people figure that out, they'll lose faith in the currency. And that's the Austrian economics crack-up boom there. And then everything spins out of control. And along the way, we could have a series of rolling crises, or we could have a return to a bull market for a while in equities and bonds, as all that money has to go somewhere and it goes into financial assets. So we can't know that. But I think what we can know is that when the big one happens, when the phase change from confidence in the world's governments to a total lack of confidence in the world's governments happens, the early stages of it will look like this. You'll see massive volatility where stocks spike, and most of the other financial markets of the world, the other financial instruments, also get commensurately volatile, and then they tank, and people on TV and in the newspapers and online start throwing out all kinds of apocalyptic opinions, but it's all just guesswork, and so that's what we're seeing now. Everybody has a strong opinion about what's going on, and most people are terrified, and the thing is, they don't know whether we've got a buying panic coming or a selling panic coming, and we really could have either one, because the markets are volatile. That's the main thing that's happening, is that volatility is spiking. And in the money bubble, James Turk and I use an analogy of a spinning top. You spin it, and it spins very smoothly at first, but then a little wobble creeps into it, and the wobble gets bigger and bigger and bigger until the top just shoots off in one direction or another. And so we're in the wobbling part of that process right now in the markets, where volatility has crept in, people are afraid, and something big will come if it's not short-circuited by some kind of massive government intervention. So I think that there's a good chance in 2016, rather than raising interest rates like they're promising to do now, I think the Fed is going to be back to quantitative easing. The the crises that are bubbling up all around the world are going to scare people sufficiently to lead the Fed to change course. And so we'll be pumping new currency into the credit markets very soon and cutting interest rates even further. I think we'll see negative interest rates spread from Europe to most of the rest of the world in 2016. And I think we'll see the Fed be one of the leaders in that movement. And the reason for that is that they have no choice. When things start spinning out of control, we can't handle even a garden variety bear market now because we're so financially fragile, we're so over leveraged, and they know that, so they can't let it happen, and they'll do whatever they have to do to stop it.
What kind of investments are you looking at right now? Because it's very difficult for people. You want to have some cash, but at the same point in time, you're concerned about the response from the Fed creating a currency crisis. You want to own gold, but gold has been in a 4-year bear market. Mining stocks have been just decimated, and just when you think they can't get any lower, they go lower. Blue chip stocks are part of the overall market. I mean, so. Just somebody who's concerned about the crisis and wants to be safe. This is a difficult scenario we find ourselves in. So what investments are you looking at right now? And would you even suggest ideas to people about what they could do?
Well, because these aren't markets anymore. It's really hard to figure out how to position yourself in them. And, I've been saying this for 3 or 4 years, and it hasn't worked out. So take it for what it's worth. But I would say bet against the powers that be. The system is going to at some point spin out of control, and the people who have bet against that, that is, who have shorted most of the major financial instruments out there and gone long precious metals and have some cash on hand and have bought really, really well chosen. High cash flow real estate, they'll be okay. And the people who've margined themselves to buy blue chip equities and are long government bonds will get crushed. But when that is the question. Is it next month or 5 years from now? And I wish I knew, because I'd love to just go all in on one bet or another and just be very clear. But right now, it isn't clear what's going to happen next, because, we could have another crisis in the equity markets, for instance, where last week's crisis occurred. And it could look like the world's falling apart, but then we could have a big central bank come in with a massive infusion of new cash and then turn everything around. Which then sets the stage for an even bigger crisis 6 months out. And that's what we've been doing for the past 3 decades. And it really does feel like we're getting towards the end of that process, because interest rates are already, zero in most places and negative in some places. So how much lower can you push interest rates? The amount of money that's been created and thrown out into the world is absolutely immense when compared with any of the real asset classes that are out there. So how much more money can we create? There's no way to know. But there are lots of catalysts, lots of things that could blow this up. And I think that's what we need to be looking at. And one of them is the political bubble bursting. As we talked about, when people in a given country figure out that their government can't be trusted anymore, either because they're corrupt or because they just don't know what they're doing, corrupt or incompetent. Either way, when people lose faith in their government, then everything changes. When a highly over-leveraged entity of some sort blows up, whether it's China or some segment of the hedge fund sector or one of the big banks that has too many derivatives, that could blow things up too, and just spread to the rest of, we have a Lehman moment or whatever. It spreads to the rest of the economy. So these things are highly probable. They're not even just possible. Something like this is going to happen sometime in the not too distant future, and that'll change everything. But until that time, there's no real way to know what's going to happen. It's a fascinating time theoretically that we're going through, because we're doing things that have never been done before, and kind of pushing the envelope of the policies that have been in place since the breakdown of the Bretton Woods system. Since 1971, when Richard Nixon took the world off the last remnants of the gold standard. We've been doing some really experimental things in terms of fiscal and monetary policy, where we borrowed incredible amounts of money and funded gigantic public sectors around the world, and we've done amazing monetary policy things where we've bought back all the bonds that a given government is producing, even though it's running big deficits. It's basically financing its deficits with newly created currency. So we've never done that on a vast scale before like we're doing now. So this is experimental stuff. And so theoretically it's fascinating, but it's going to blow up in our faces very soon, I think.
John, what's your take on this? A lot of people, it's all over the internet, so I know you've seen it. I've even seen atheists talk about the Shemitah and this 9:15 and 9:23, and then you've got I can't think of the guy, he's the forecaster, Martin Armstrong, with an October 1st prediction, and then I think Weiss is saying 7th. I mean, there's a lot of predictions, and people are forecasting a crisis, and some of them are pointing to religious symbols and biblical passages. I mean, it seems to be all bubbling up right here in September. Have you been able to cherry pick anything that's kind of, where you've connected the dots yourself and said, that's pretty interesting. Maybe something will happen in September?
Well, we're a pattern-seeking species, and we there are a lot of patterns that don't control human behavior, but seem to track the progress of our cultural, psychological states, There's the Kondratiev wave, which is a long, long wave that coincides with credit cycles. We build up too much credit, and then it all blows up in our faces. And we do that over and over again every 60 or 70 years. And so there are shorter patterns within that longer pattern, one of which seems to coincide with 7 years. And so that's reflecting some aspect of human psychology. But at the same time, we've got all these new tools and new policies that are out there that have, in part short-circuited the long wave. Kondratiev wave, it should have peaked in 2000, or maybe even before that. We should have been deeply into Kondratiev winter right now, according to that pattern. And because we have unlimited printing presses all around the world, we've been able to keep that at bay for a while. And it's possible that another crisis hits in September, which, it should. Crises should have been blowing up all over the place for the last 30 years, and we should be really deeply into some kind of an end of the world financial scenario now, where the old systems don't work anymore, the old policies don't work, and we're paying a price for the old policies and coming to grips with that failure and trying to work out some kind of a new financial system that we can go forward with in a sustainable way. We should be deeply into that now. We're really not, because we've been able to keep the reckoning at bay for a long time. So it wouldn't surprise me at all to see a big crisis hit in September or October. And then the question becomes, how do the world's governments respond to it? And do they still have the firepower to stop it in its tracks and turn it around? The way they did with the 2008-2009 crisis. I mean, that should have been the end of the road for us there. When derivatives started blowing up and Wall Street effectively went bankrupt, that should have been the end. And we were able to borrow another, according to McKinsey & Company, $57 trillion and keep the game going for a while longer. So when the next crisis hits, we will try to do the same thing. And the question is, will we succeed? And I have no idea. I mean, these numbers are so huge, they're surreal now, and why can't they get bigger if they're this big already?
It's so true, and they'll always do whatever they can to keep it intact because they're getting $200,000 a speech, and all the regulations are helping their friends. I mean, it's just these criminals are going to fight to the death to keep the current system intact. John, dollarcollapse.com. It's a great website. I'm noticing the last few months here, maybe the last 6 months, you're putting out a lot more articles than you used to. Original content at the very top when you sign in or on the email list. Maybe I'm wrong. Maybe I'm just starting to notice, but I've been enjoying all the great content that's been coming my way from your website. I've also noticed that at the top right there, it says John Rubino, an analyst of Bearing Asset Management. If you want to just, before we close out, give us an update on the site as well as any new ventures you're entering into.
Yeah, well, Thanks for the kind words about the content. And I have been writing more lately because there's a lot more to write about. Things are really getting interesting now. It feels like 2008 in a lot of ways, with some kind of a reckoning coming, some kind of a big crisis, a Lehman moment out there waiting to happen. So I've been doing my best to chronicle some of the aspects of that. And the Baring Asset Management relationship is new. I just started working with those guys, and they are a crisis investing oriented fund company where they've got a couple of funds that are designed to protect people from another replay on a bigger scale of 2008, 2009. And so their clients are allocating the part of their capital that would go to protecting themselves against the possibility of a crisis to Baring. And Baring is investing that money in things that will do well if the rest of the financial markets do not do well. So I think that's a really, really crucial place to have some of your money going forward, because there's a good chance that the financial markets do not do well. So, give me a call if you want to talk more about this.
Yeah, thanks very much, John. And by the way, everybody who goes to dollarclaps.com, you can subscribe to John's email list. It's free. You just can't beat that price. And it's not just about the dollar collapse. There's information and education on government, on libertarian ideology, even environmental news. So, and then also deflation. So a lot of people, are interested in the crisis, and there are plenty of Austrian economists out there and analysts who believe that we won't have a dollar collapse, but the dollar will rally. And John has those on his website as well. So it's really a great place to get great information, and it's not just single-minded. There's all kinds of points of view from the best minds all over the world. John, thanks again for your time. I appreciate it. Everybody check out dollarclaps.com.
Thanks, Dan.